Welcome back for my final daily analysis video with me, Richard Perry, market analyst at Hantec, on Friday the 4th of December. Now, looking at the DAX, we've seen that the DAX has just drifted over actually in the last few sessions. 3 negative candles in a row, really put downside pressure actually on the supports of the breakout, or the near-term breakout, I should say. There's a key level that was broken yesterday, 13,230. And we really saw that. I think that level is now starting to really put pressure onto the downside. If you see another closing break, I think of that 13,230 level, essentially I think you then start to open up these reaction lows of November again. Really do, because if we start to that breakout, that breakout was really important, I think, last week, and holding on to that breakout initially, then looking to move higher. If you now start to consistently break underneath that 13,230, my mistake, you then start to complete a top pattern. And you can see that through the hourly charts and the 4-hour charts. Here we see the 4-hour chart. Zoom out a little bit, where you can see this sort of topping area starting to develop. And closing below that, you'd project that to, essentially you'd project that as a downside move. And you can measure that from around about 200 ticks, 13,430 down to 13,230, 200 ticks projected down. And you can see that that begins to test the 13,000 big figure level. So that's a really important level. I think if you start to close consistently underneath 13,230, you really are starting to put pressure to the downside. And you can see in the last few days, really, lower highs, lower lows, breaking the support now. And if the market doesn't now start to break back above these reaction highs of around 13,275, then the market is really putting pressure onto the downside. You've got this configuration now on the hourly chart RSI where you're negatively configured and correctively configured. So you're putting pressure, you're trading underneath all the moving averages, which are beginning to roll over. And again, that would suggest a move to a more corrective outlook. So that this is a really important stage. The bulls really do need to respond to this today. Otherwise, you do start to get this corrective outlook developing, and you can then see could then see the market back around the 13,000 mark. So the reaction to payrolls today, I think, could be a really important one. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos. Go to our website to sign up for our webinars and click to watch Trader Talks, our videos that give you top trading ideas.